All right, here we go. Well, hello, everyone, and welcome. We are so glad to have you. For those that are on our Zoom chat, I'm going to ask if you would mind muting your mic until the Q&A time comes up. And for those of you that are watching this virtually, thanks for joining us. I'm Dr. Maribel Carlson with Chief Financial Mom, and I feel so privileged today to welcome John O'Connell. We actually just met a month ago at a
That's right.
technology conference, but we knew instantly the synergy was there, and we're like, okay, we have to get together and do this. So let me introduce John, and then we'll turn it over to you a little more. John has more than 29 years of leadership experience, and he has come from both the business and organization world. He started his career in designing and developing financial applications at Merrill Lynch, KPMG, and Peat Marwick. John transitioned from developing technology into sales and marketing while leading financial services virtually for Sybase. John was a member of senior leadership teams for several startups and IPOs and packaging 2 other firms for sale. He returned to Merrill until its acquisition in 2008, and he had a North American leadership position, Oracle, for over 8 years. So John has been in the C-suite for a while. He's led private fintech firms. He has been around financial technology and personal finance for decades. He is really excited, especially though recently, about empowering investors. And we're going to talk more tonight on what that means. He recently wrote or is releasing, I am putting that in the ING context, a new book called Rise of the Activist Investor. And this is a story of a young activist investor as she discovers activist investing and starts her own journey. So we're going to learn tonight even what activist investing is, because I think some of our listeners, John, are going to say, what in the world? I've never heard of this and what it is. So you have been in this area for decades. Would you give us a little bit of your background and your story of how you got into the field?
So I was always interested in the capital markets and investing. And at the time that I was going to college, I studied computer science and mathematics. And then I started my career. I got, into my career, and then I decided to go for an MBA, and I went for my MBA in finance. So I kind of started in technology and looped around to get into really back into finance. But my first job was developing valuation systems at Merrill Lynch. We developed one of Merrill Lynch's first, balance sheet systems. So we were evaluating all the positions that Merrill Lynch had in the first job that I had in my career. And the reason we did that is we were trying to determine what Merrill Lynch's risk was, counterparty risk. So in other words, when you enter a transaction and you do a trade, there's someone on the other side of that trade. And how risky is the other side of that trade? Back when I first started my career, there was real risk on the other side of the trade. Now, many of the trades wind up happening pretty much, that they tend to now be, all through much more exchanges and much more, closed loop. So there's not a lot of counterparty risk on the other side. And there are a lot more market participants now than there were when I first started my career. So.
That's awesome. Thank you so much. I think that's the hard part sometimes that we forget when we're in the industry for so long is how to talk to every day, right? Like most people don't work in an investing world or live in an investing world. In fact, they probably have heard the word, but they have no idea. Bless my poor mother. I always tell stories and she's like, oh, Mary, please. But I remember one time saying, well, Mary, I'm diversified. I have 7 retirement plans. Well, what that meant was she had 7 401ks and 403bs. And I was like, oh, mother, that is not diversification. So I think it's things like this, conversations like this that I want to bring up because I don't want anyone to feel like they should have known. I think that's the big thing is we don't want to feel shame or thing. And what you're trying to do is say, it's okay to not know this. And let's start now when you're really young. That's what I think I really like about your book and your audience is that this is for a rising generation. So please describe in layman's terms, what is the definition of an activist investor?
So first, let's even start with the emerging wealth class, right?
Perfect.
Which is a young investor that's really kind of getting into investing. So we call them the emerging wealth class because you'll hear some financial advisors call them Henrys, high earners, not rich yet. And then
Mhm.
you can, in a lot of the talks that I do at conferences, I talk about super Henrys, which are, I think of a college graduate that's graduating with no college debt and in a STEM field, right?
Mhm.
Science, technology, medical field. Their earning potential is very high. They have no college debt. So they have the ability to accumulate wealth much more quickly than perhaps their contemporaries, their colleagues that are graduating college.
Mhm.
So, but right now they have no investable assets, right? They're just starting out. So they're the emerging wealth class. And that emerging wealth class is not just young people. Think of someone who, has paid off their student loans recently, and they could be in their 30s or
Mhm.
maybe even their later 30s. And now they have the ability to start accumulating and building wealth for their retirement. So they're also part of that emerging wealth class. Now, couple that with, today, a lot of the younger investors have been through a number of social movements, right? We've
Right.
had more social movements today than you even saw in the 60s. So
Right.
when you think about these investors, they not only want to invest to generate returns, which many people would say that's traditionally what you want to do. You invest money so that money grows and you build wealth.
Right.
What you find today is a lot of investors really want that money to also reflect their personal values. They
Mhm.
don't want to invest in companies that don't share the value set that they have, right? So think about, for an example, you could think traditionally a very religious person may not want to invest in sin stocks, which are alcohol, tobacco, firearms. You have investors today that want to be more socially conscious, right? Think of a woman investor as a great example. Women investors, more often than not, will invest with their heart and not necessarily just for the return. So when you think about that, that's really an activist investor. Now, we in the book, we cover kind of a range of activist investors, kind of an arc that we call the activist investor arc.
Mhm.
That starts out with a passive activist investor. So, in other words, an investor that sits there and says, I'm going to invest in maybe a mutual fund or an electronically traded fund. You'll hear those called ETFs.
Mhm.
Um, and that might be a socially conscious fund, right? There's a lot of talk today about ESG and SRI, and ESG is environmentally, social, and governance investing, and SRI is socially responsible investing. But really, those are just stopgap measures for us to get to real, true activist investing. And I think what you're seeing is the traditional investing community is trying to put these types of investments in front of investors because they are more socially conscious and they're trying to react to that demand for socially conscious investing. So you can start as a passive activist investor and then go all the way to a true activist investor. And a true activist investor is someone that not only invests in a company, but tries to change the direction of that company. Um, if you follow some of the news, Carl Icahn actually just did this. He believes his daughter is very, very impactful, and she believes very much in the treatment of animals and how animals are used in our food supply. And
Mhm.
he made a very significant investment in McDonald's and launched a proxy vote, which is basically just putting a vote up to change the way McDonald's is dealing with animals. Um,
Mhm.
so, and that investment happened for a very insubstantial amount of money. It was $50,000.
Wow.
So now an individual investor may not have that. And what we cover in the book is if you get a couple of like-minded individual investors to band together, you can create what is called a wolf pack, and you can buy shares and you can create a proxy vote, and your little investor club can actually change the direction of a company.
Wow, John, this you did a great job in explaining that for most of us that don't deal with this day in and day out. And I think that's really important because we've seen a transition from the olden days, which is pensions, right? Our companies that we worked for and we stayed with for 30 or 40 years took care of us, or that's what we thought, or the government or whoever else. And now this generation, and in fact, even going back to the X and the Y generations, They've not seen that. We don't have pensions in place. Very rare exceptions are pensions in place. So many of us are seeing our 401ks and are used to this idea of investing. When you talk about this idea of activist investing, most people, there's two places that they really have their, and I'm going to put in quotes, wealth for the middle class, and that is their house and their 401k or their retirement plan, whatever that may be. Are
Correct.
you still able to do any sort of active investing within these portals, or does it have to be in a brokerage account outside of that?
No, it can absolutely be inside of one of those types of investments. So a 401k or a 403b or your traditional retirement account, it's more difficult because what happens is, and you've seen this, right? When you
Mhm.
go to select your investments in a retirement account, those are put together by your plan administrator, whoever administers your retirement plan. You know, by the way, your retirement doesn't need to stay in that 401k. A 401k is nothing more than an individual retirement account under a company. And I grew up in technology, so I changed jobs when I had these startups and things like that fairly often. So I like to joke, I was a little bit like Johnny Appleseed. I had orphan 401ks all over the place.
Yep.
And a lot of, if you look at again this emerging wealth class, when the in the time of the pensions, and we talk about this in the book too, in the time of the pensions, most people would stay at a company in excess. They would only have probably 3 to 4 jobs in their entire lifetime. And
Yep.
their average tenure at a company was over 15 years.
Mhm.
Now, the average tenure of anyone under the age of 40, they're going to have almost double that number of jobs in their career. In fact, most of them will have in excess of 10 different jobs within their career, and they're going to have a career change.
Yeah.
They're going to start off doing one thing and they're going to end their career doing something very different.
Yeah.
So there's plenty of opportunity for them to roll those 401ks, those 403bs, those retirement accounts into an IRA retirement account. And when you do that, the amount of investments that you have access to just increases vastly. So I would highly recommend if you get to a point where you're really trying, you're trying to accumulate a bunch of wealth, talk to a professional, talk to a financial advisor and find out what that financial advisor can do to help you. Part of the issue that you have when you're in an emerging wealth class is many financial advisors have these minimums that they want you to have to work with them, right? And if you don't meet that minimum, then you could still work with a financial advisor that may do what's called fee-only financial planning. So they'll help you with a plan, then they're probably not going to talk to you for a year or two, right? And that's okay because those usually you can do for just a fee. It's like getting advice from anyone else, like an attorney. You pay them for a couple of hours, they give you a bunch of advice, and then you follow that advice.
Mhm.
So you can still, even as an emerging wealth class, work with a financial advisor, tell them what you want to invest in, take a look at your activist, your activist bend. What do you care about? And then they can help you find the investments that really match your specific, wants, desires, belief system. They can really help you.
That's awesome. In fact, we'll put in the show notes at Chief Financial Mom. We actually have questions to ask a financial planner. And so that can help you drill down to get to the planner that really fits for you and that you understand how they're getting paid and what they're giving you advice on. So we'll make sure and include
Absolutely.
that as well. Now, John, here's another question for you. So companies are changing all the time, right? And you
Mhm.
give us a great example with McDonald's. Let's say that I start off at a company that I believe has my values and my beliefs. But as we've seen over the last, even just in the last decade, there's been so much turmoil and change. And I think even us individually, we change, right?
Absolutely.
Companies change, people change, values change. So help me understand, as part of this social movement, how do you follow what companies do and how do you become a part of that change, or how do you leave a company that is not doing what you want to do? How do you stay up with companies as they're constantly evolving?
So the first thing I would recommend is do some research, right? You can pull the annual report from any publicly traded company. In that annual report, it will give you an idea of the direction the company's moving in. Now, the SEC is looking at new rules that help govern the disclosures a company has to make around their ESG, their environmental, social, and governance.
Mhm.
And if you actually look at Europe, they have a law called the GDPR, which does require companies to disclose a lot of their ESG capabilities. But I would pull the annual report and take a look at what the company believes in. The first thing we do in the book,
Mhm.
the first thing I would recommend, quite frankly, is figure out your belief system,
Yeah.
right? So in the book, we do give you links, and we give you, because it's a handbook for young investors who want to become activist investors. So we do give you a link in the book where you can take a test that will help you to determine what your belief system really is. It'll help you to sharpen that belief system that you have right now.
Mhm.
And then you can pull the annual reports, educate yourself. We cover in the book, how do you go look at some of these investments? What can you do to educate yourself on what that company stands for? And then you can absolutely start to pick companies. You can start to pick different investment funds that will align to your beliefs. Now, you brought up a fantastic point, Mary. Companies change,
Yeah.
right? Look at the recent announcement that that workers at Apple have unionized,
Yep.
right? Why did they do that? Because they weren't happy with the way Apple was treating the workers. Otherwise, you don't unionize.
Yep.
So even there, you're seeing a company that, quite frankly, is a fairly beloved company here in the United States. Their workers don't necessarily agree with the direction of the firm, and that's why they've unionized. So those workers can also, and we cover this in the book too, they could be shareholders. And if they can set direction of the company. There's a really famous actually case study around Procter and Gamble, where Procter and Gamble was approached by a company to break them up. They were going to break up the company. And if you remember Procter and Gamble, if you're
They
not
were
familiar with the
huge.
company, almost every
Yeah.
cereal you eat is like a Procter and Gamble cereal,
Yeah.
right? So but one of the largest groups of shareholders at Procter and Gamble were ex-employees that were in these stock purchase programs, and they banded together on social media. They used Facebook to band together, and they voted down the breakup plan, which brought that activist investor to the table to have a conversation with their investors. So if regardless of what you think about the political system in the United States, because that's a hot button,
Oh yeah.
regardless of how you feel about that, remember this always. Employees work for a management team. The management team works for the CEO. The CEO works for the board of directors. Who hires and fires the board of directors? The shareholders.
Yeah.
The shareholders. It is really a democracy. If you don't like the direction a company's going in, you can tell the board of directors. If you're a shareholder, you can absolutely let your voice be heard with the board of directors. And if the board of directors doesn't do what the shareholders do, the shareholders can vote them out and fire them.
Yeah.
So the power of the direction of a company in the United States truly is held with the shareholders.
Mhm.
And that's why I think the book is so powerful, because if you don't like the direction the company's going, you can get a bunch of other like-minded shareholders together. You can form an investment club. And if you own enough shares, you have to register with the SEC that
Mhm.
you're what's known as a wolf pack. But you can absolutely do that. And then you can put your own board members up for election. And
This is
that
fascinating.
will absolutely change the direction of a company. Because
Yeah.
if there's one thing a board member would like to do, it's keep their job.
Yeah. Yeah. And it turns some heads, right? It
It
makes your
will.
voice heard. I think that's the most fascinating part that I'm taking out of this conversation is sometimes we feel so small and insignificant in our situations, or we think, oh, that'll happen when I'm this age or something in the future. And really, you've given some great examples recently of changes that have taken place on very small dimes. They always say like a ship changes on a very small helm that changes the whole direction of a ship, which can
Yep.
make a tremendous difference. You know, John, I think one of my favorite parts of this book is who you wrote it for. Would you share the personal side of this book as well?
Yeah. So the main character, so every character in the book is someone from my life. And in
Mhm.
some cases, they're amalgamations, right? So the main character, Eileen, is named after my mom, and she's a neuroscience ICU nurse, which one of my daughters is a neuroscience ICU nurse. and she gets advice from a variety of friends, because this is really Eileen's journey. And Eileen does not know activist investing at the start of this book. Eileen basically is invested in a couple of different companies, and she has this really small portfolio that's traded on a handheld trading application, like many emerging wealth class investors are.
Yeah.
And she just becomes, through her friends and through the other people as she meets, she becomes more and more educated in activist investing. And she learns about activist investing and how to do it. And then the book culminates with Eileen and her investing club launching a proxy fight with a company. So it really does. My mom was always very, empowering. She always thought that she always thought for her children, you could do anything. And I'm the father of 3 girls, and I believe they can pretty much do anything. So this book really does try to help people to understand, what is this activist investing thing? How do I do it? You don't have to go all in and become like I'm going to launch a proxy vote. That's why we have the activist investor arc. You could be a passive activist investor and say, I'm going to invest in companies that follow my belief system, and that's the only things I want to be invested in. So I'm going to seek out ESG or SRI types of investments that match my beliefs. Or you could get to the point where, you may be a shareholder for an individual firm and writing letters to the board of directors, and, publishing open letters in like the New York Times to say, this is what we believe that this particular firm should do. If you look in the Wall Street Journal, they do that all the time. They publish open letters to companies all the time.
Yeah.
And that's not some really big corporation publishing about someone else. That's a group of investors that are making their voice heard publicly.
Yeah.
So yeah, the book is very near and dear to my heart, and like my entire family's represented some way in that book.
I love it. And I love the fact we both share a similar trait that we both have 3 daughters. And I love the fact that it's written for women in particular, because I think a lot of times, especially as moms or women, we feel that maybe we're on the outside of investing. That used to be very much a man's world. And it is not true. We are just as much, if not more, a part of that in this day. Tell us more of your thoughts on that as we kind of wrap up.
Sure. I cover this in a lot of the talks that I do too. When I talk to wealth management firms, I say to them, you should be paying a lot more attention to women investors. In the next several years, with the great wealth transfer, there's $68 trillion that are going to transfer. And, it's really, a lot of wealth management firms' clients are older clients, right? Yes. So what tends to happen, but these are statistics that are irrefutable. If the primary relationship is with the man and they pass away, 70% of the time, the money leaves that wealth management firm within 1 year. If both parents die and the wealth management firm has no relationship with the emerging wealth class that I talk about, 97% of the time, the money leaves the firm. Yep. So this is a wake-up call for investment management professionals with wealth managers, that they need to establish some sort of relationship with the emerging wealth class. And if you don't understand the activist bend of this emerging wealth class, you're going to miss the boat. And then when you think about women specifically, right, 1/3 of the money in the United States is controlled by women. Yep. And in 5 more years, $30 trillion will be controlled by women investors. Yep. And as I said, women investors really do care a lot about where their money goes and the companies that their money supports. When you think about it, if you're a shareholder, you're propping up that stock price. If you're helping that stock price, you're giving that company access to capital at lower cost. You're giving them access to more of a hiring capability. There are so many things that your share price actually helps that firm. So it's very, very clear to me that women investors need to leverage the investing power that they have. And that's one of the reasons one of the other reasons I wrote this book is I think that a woman investor holds so much capability. All investors do. But when you look at the numbers of how much money is going to transition to women, it's mind-boggling. There's a lot of money that's going to go there. And women investors absolutely should be able to to basically talk about what they care about in investments, and then make their voice heard. It's very interesting. I was thinking too, Abbott, as you know, has had this really big issue with formula, right? And all my girls had formula. So any parent that's worrying about formula right now, I feel for you immensely.
Absolutely.
But what would happen if investors got together and let their voice be heard about Abbott closing that plant?
Mhm.
Do you think that would change the direction of Abbott? Well, certainly would be a wake-up call to the company at this
Right.
point. That would be a huge wake-up call to the company, right? So, and investors can do that. Individual investors can do that by banding together and creating enough of a holding that will change the company's direction. And look, if you can change McDonald's direction with only $50,000, imagine what would happen if women have $30 trillion in their hands in the next couple of years. What would happen if a lot of women did get together at an investing club and say, I do want my voice to be heard with a company? The amount of power that women investors would have, the emerging wealth class would have, is really, really mind-boggling.
It really is. John, that reminds me of a sign in my pediatrician's office that says, a worried mom does more research than the FBI. And it's true. There's so many things that I think a woman or a mom can really do to harness that. And I love that analogy or that example with Abbott, because it's in crisis mode. And when a mom is backed into crisis, they can come out pretty strong. That's what's
Absolutely.
inside them.
Absolutely.
I have a question for you. At the end of each interview, we like to ask our guests, what is one small step that a woman could take today to become more of an activist investor in her life?
I'm actually going to give two small steps for a
Great.
second. I'm going to give one on just general investing, and I'm going to give one on activist investing. On general investing, talk to that financial advisor. If your family has a financial advisor and they are not engaging you in a conversation, you need to have a conversation with them. And if that financial advisor in the next meeting you have with them only talks to your spouse and does not give you enough attention, you need a new financial advisor. You should absolutely get a new financial advisor, because
Absolutely.
it's a household, right? It's that household's money. It's not your spouse's money or your money, it's your household's money. And if you don't have a say in it and you don't understand where that money is going, you should absolutely get a new financial advisor.
Agreed.
The second to answer your question directly, what would I recommend for women investors, or for that emerging wealth class even? Pick up the book, take a look at it, think about what you're investing. Where do you want your money to make an impact? You've worked very hard for your money, and you deserve that money to reflect your values as well as generate a return for you. And get educated, take a look, get an idea of what your belief system really is, sharpen that, take some tests, figure that out, and then go out and make that money not only work for you, but make the companies that you're investing in reflect your beliefs as well. Let them work for you, because they do. If you're a shareholder, the board of directors and everyone in that company reports to you, and you should exert that level of influence on the company.
Absolutely. And let your voice be heard. That's fantastic.
Absolutely.
John, so when is your book coming out? Can we ask you the million-dollar question?
It's going to be out in the first week of July. Pre-orders are out right now on my website, which is www.john-o'connell without the apostrophe.com. And then the pre-orders for the Kindle are out on Amazon right now.
Great.
So you can get the Kindle version on Amazon, and you can get the print version on the website, and we're shipping within the next 2 to 3 weeks.
Awesome. Well, we will make sure and include all of those links in the show notes for you as well. And I'm sure, John, if someone wanted to reach out to you directly, it would be through that same website, right?
Absolutely. You can definitely get me on that website without a doubt.
Awesome. Well, thank you so much for joining us. We sure appreciate you.
Thank you very much, Mary.
Yeah. I'm going to open the floor to those that are here tonight and see if there's any questions we can take from the audience. Kina said, the meek may inherit the world, but women will manage it. I love it. You know, John, while we're waiting for them to think of their questions, some of the things that I have loved from just talking with you and discussing is that this seems in a lot of ways kind of like what we're hearing even in the political realm of having like how much one vote can count, right? And we've heard that a lot recently. And I think you're saying a similar thing, but just in a different sector, right?
Yep.
This is in the investing world. And I mean, even myself, I get my prospectus all the time and I get my voting right. And I admit I don't always take advantage of that. And I think that's a really important thing is to realize that just like your vote counts in the political world, it also counts in the investing world. And that it's important that you're doing it in both places, which requires work. I mean, I think that's the part of it, even in politics and investing. It does take some work. It takes some education. It takes some research, some looking things up. But at the end of the day, that's how you make your voice heard.
And if you think about, again, just to go back to the activist investing arc we have in the book, the third step in that investing arc is an active voter, right?
Yeah.
And an active voter, you mentioned you get your proxy vote every year, and you can vote in the proxy. All you have to do is kind of read what they have in that proxy vote, and then you can make your vote heard. I mean, I know some folks that they look for the women board members that are going to be nominated, and they will vote women board members in, because they're female and they want to see more women representation on the boards. So I highly recommend take advantage of that, right? Even if you're just that active voter and you don't want to become really an activist necessarily, definitely take advantage of it, because even that small step of saying, I want to see more representation of women in the boardroom. So I'm going to vote this particular woman candidate. I'm going to cast my vote for this candidate for the board of directors seat. That in and of itself can make a huge difference.
Mm-hmm.
There's the voting on proxy, it's only called a proxy vote, by the way, because you don't have to go to the board meeting anymore.
Mm-hmm.
In the old days, you used to have to go to the board meeting, and then we came up with proxy voting, and that you don't have to be there. Just like proxy voting in a general election, you can vote by mail. You don't have to be there. It's the exact same thing. But just voting your proxy can definitely change the direction of the company. And there are so few votes that are normally cast that you actually can make a pretty big difference if you just vote with your heart and with the way that you'd like, again, with your belief system, the way you'd like to see it.
Yeah, I think that's the big key is realizing how few take advantage of that. So if you do something like that, you are an outlier already and your voice really can be heard. I think of my father is quite the letter writer. And if anything ever goes wrong, and I will tell you, even at the local and state levels, and even federal levels, legislators have paid attention because he writes so many letters. In fact, I think it was quoted once of them saying, do whatever it takes to make him stop writing the letters, just whatever he wants done. So I don't know, I recommend it to that extreme, but a letter can make a big difference. A vote can make a huge difference in both the political and the investing world. And so it's a great way to make your voice heard. Well, thank you. I think with that, we'll go ahead and break. And I so appreciate you coming on the show, and we will follow up. Any communications that I get, I'll make sure and send your way, and vice versa. Good luck with the launch of the book. We're very excited and we're glad to have you on the show, and we'd love to see what the future holds. Hopefully we'll have you back again soon.
Thank you very much. This was my pleasure, and I really would love to come back. Thank you again.
Thanks, John. Good night.
Bye.